I'm Greg Hunter. Welcome to USAWatchdog.com. We have a guest I haven't had on for a while. Much to my, I don't know. I guess I've had an embarrassment of bookings, but he runs Matterhorn Asset Management. He is Egon von Greyerz. Egon von Greyerz, thank you for joining us today on USAWatchdog.com.
Greg, very good to talk to you again.
You also have a your gold side, gold Swiss, gold.
Gold Switzerland.
Yeah, Gold Switzerland. That's right. And just so other people know, you have a couple of decades in European banking at a very high level. You have been vaulting gold for people, very wealthy people, on two continents in secret locations. I guess gold by the ton, by the bar, by the 600-ounce bar, whatever. So you have your client base is some very wealthy and connected people, and I want to start with that. What are your clients saying? I hear a lot of one negative story about the debt, about the economy, about how shaky things are, about how on one side, and then on the other side you hear there's a labor shortage and the economy is booming in the U.S. and then on the other side we have these tariff wars and jitters about that. What are your clients saying about what the financial and political landscape looks like right now?
Greg, you must remember that our clients are into gold, and not because they are speculators or love gold. They hold gold for the same reasons that we recommend to them to hold gold, which is for wealth preservation purposes. So we identified already at the beginning of this century that it was essential to hold gold as insurance against all the things that were going to happen in financial markets, in the world economy, and even politically in the coming years. And that's why we have the type of investor who's not worried about the short term. He's not trading his gold. He's not buying and selling. He invests and he holds the gold as insurance against the things that you mentioned. We have our client base is a lot of clients in the US and North America, and they are particularly worried about the economic climate, obviously, and also of the political climate. I mean, we're not a political organization, so we're not really going into that in detail. But we have some very wealthy clients who are worried about what's happening politically, worried about indictments, worried about what the politicians are doing, and worried that a lot of politicians are going to be exposed in coming months. It's not something that I specialize on, but I know that that's part of what the U.S. clients are worrying about.
So they get the feeling that that things are going to come unglued, that things are going to get really shaky. That's your impression.
Yes, that's definitely my impression. And what is interesting, of course, when economic cycles turn, and I think we are in for a turn quite soon, whether that's, that could very well start in the autumn. It'll start with stock markets, and then it'll start obviously with debt markets. And then a lot of things come out of the woodwork when things turn. You have a lot of companies in the world and in the US that are massively overvalued, and they swept everything under the carpet, just as politicians have. And they get away with everything in good times, and so have corporate America and corporate world, not just the US, but around the world. I've been around long enough. I've been in banking, I've been in corporate life since the late 60s, and I've seen it happening before. I've seen how, when times turn bad, there are so many things being found, and that will lead to, not just court cases and people being indicted, but it will also lead to political unrest, and it will certainly lead to the masses who, as we know, are getting poorer by the day, and the gap between the rich and the poor is increasing exponentially. And of course, when things turn bad, the people who have empty stomachs or hungry, they are going to protest, and all of those protests will not be peaceful. That's for certain. And that's the same not just in the US. It's going to happen in Europe too. And in Europe we have, of course, the additional problem of a high number of immigrants having come in the last decade. And of course, when times are bad, the the minority is always blamed by the majority for the bad times. So I'm sure there'll be major problems in Europe also, just like there will be in the US.
You talked about your clients' long-term investing, that you identified that you needed to hold gold at the beginning of this century, in 2000 on. And what are your fears? I mean, how bad do you think your clients? What are your clients? What's the maximum that your clients are insuring against if they have to do? What's their nightmare, sum of all fears scenario?
Well, I've been talking a lot about this over many years. I won't call it worst scenario, because I think that's not the way I look at it. I look at risk. I analyze risk, and if I look at the world financial system, it's a massive bubble consisting of just paper and paper and paper that one day will lose most of its value. And when paper loses its value, money will lose its value, and the assets, underlying assets, will also come down, since they've been backed by debt that will never be repaid. So this is what our clients are worrying about. They're not mad. They're not people who hide in a cave. They're just normal people who just find, just as we do, that risk has to be protected. Now we have quite a wide range of percentages of insurance, if you want, because we call gold insurance or wealth preservation, because we believe that is the best way to protect against what is going to happen. Physical gold held outside the banking system, obviously. And some of them, I would say that none of our clients hold less than 20% in physical gold and a bit of silver. And some hold 50% or more. So there's a wide range.
Well, hold on just a minute. I want to just back that up. A lot of people say hold 5% or hold 10%. I mean, Jim Rickards comes out and says hold 10%. I know he doesn't want, and he's a nice man. He's a good guy, smart guy. But I know he doesn't want to tell people I hold 50%, because if it goes south, they don't have the mentality like your guys have that will say it's all right. But you're telling me that there's your clients, the least they're holding is 20% of their total assets. We're talking about multi-millionaires here, maybe billionaires.
Yeah.
The least there. So if you're holding so you're telling me that you have clients, say, that have $1 billion and they have $200 million in hard gold and silver. Is that what you're telling me?
Correct.
Wow.
Now, you have to remember that this is not what everybody believes in. As you probably have heard, physical gold, there's only 0.5% or just under 0.5% of world financial assets into physical gold. So this is a very small group. It's still a lot of money, but this is, of course, the majority doesn't believe this, because if they did, all the other markets would collapse. But to particular people who are concerned about the risks that we deal with, they are concerned not just in a minor way. As I said, I don't think anybody has just 10%. And I think that's much too small. Look at all the asset classes now, whether you take stock markets or bond markets or property markets, they're in the most massive bubble fueled by exponential growth in credit. Credit has trebled since global credit has trebled since the end of the 1900s. 1999 to today, global debt went from 80 trillion to 240 trillion. And that, when debt trebles, it doesn't mean that risk trebles. Risk goes up exponentially. And then you add to that, of course, all the off-balance sheet items, the derivatives, and I estimate, and unfunded liabilities. Derivatives is at least at 1.5 quadrillion. A lot of banks have moved it off balance sheet into clearinghouses and other places. So officially it's reported about 600 trillion, but it is probably around 1.5 quadrillion. And on top of that, you have the unfunded liabilities, etc. So you're talking about risk that no one understands, no one can measure, and most of it is in paper or air, if you want, because it's like a balloon. When you pop that balloon, you'll find that mostly inside there is air, which means that asset values will implode, and so will debt. And I think stock markets, bond markets, property markets will go down by at least, I would say, 75%, and I could say, up to 95 or more. And some will disappear. A lot of companies will disappear. I'm not saying that the world is going under. I'm just saying that risk. Remember, in 1929, when risk and debt was nowhere near what it is today, and certainly not globally either. Now it's a global problem here, not just the US. When 1929, as the stock market went down by 90% between 29 and 32, and took 25 years to get back to the 29 level. So to go down by 95% today, I mean, it wouldn't surprise me at all, because you're talking about a much bigger problem. And don't believe that central banks or governments are going to be able to rescue this. They have used all their tools. They have inflated money supply. They have printed money, and they are telling us all that they have it under control, but they have nothing under control. And there's no margin to lower interest rates anymore either. And therefore, in my view, interest rates are going to surge. It could be that they try to lower them short term when the markets get under pressure again, but that won't succeed. It will be like in the 1970s, and we will see 20% interest rates. I know people think he's a pessimist, what a gloomy view, but I'm pointing out a very likely path for the world economy in coming years, whether it's in the coming 5 years or 10 years, but let's say between now and 2025. And let's hope it doesn't happen. I don't see a solution. I don't believe that there is anyone who can do anything about it. But anyway, miracles can happen. I think it's unlikely, but they could. But so in any case, with this risk, people have to take insurance. I don't know, people said he's just talking about gold because he has a business that actually helps people to buy gold. Well, we went into this ourselves privately for ourselves and a group of investors that we advised privately. There wasn't a business at all of helping others to buy gold. We did this because we saw the risk, and then eventually people around the world said, "Can you help us?" So we did this because we saw the risk for ourselves, and then now, to me, this is a passion. This is not a business. This is a passion. I'm passionate about trying to help the few people who are worried to preserve some of their wealth, because I don't see that it's possible. Sure, hard assets generally are better than the paper. A lot of the paper will disappear, as I said, and so hard assets, which is land, buildings, mineral rights, etc., they're better than paper. But a lot of these, property now, long term has always been a good investment, but short term property is a bubble too, and so is art. I don't believe, art now is just an investment of the rich. Today they don't know what to do with their money, so they have too much of it. So if you have 150 billion, like Jeff Bezos, what are you going to do with the money? You have to buy things that nobody else can buy. You buy things and push prices up on things like art. But so that's also a bubble in the short term. But long term, yes, I think that property, gold, silver, even art. But today, all the other markets, as I said, are in bubble territory also. Therefore, I think your best wealth preservation today will be gold. And remember, I'm not a gold bug. One day, gold. We bought gold started to buy gold in 2002 at $300 when it was undervalued and unloved. One day, everybody will want to buy gold, and gold will be multiples and multiples of what it is today. And at that point, if there are other things to let's say, either sell your gold for, if there's a financial system where you can take the money out and invest in something else, or you barter your gold to something, assets that are undervalued and unloved. That time will come. So it's not a question of always holding gold. You might have a small percentage in gold, but not hold all your money or a big part of your money in gold, as I think investors should do today.
That's when you talk about your clients having a minimum of 20%, nobody would recommend that. No investment manager, they have position limits, which I'm not criticizing you. I'm not criticizing hell. I wish I didn't know what I know, and knowing what I know, I think that's about right, 20% at least. Knowing what I know, because I know it's exponential. It's phenomenal. I mean, we're missing. we have a $21 trillion debt, and we're missing, and nobody wants to address this in the mainstream press. The U.S. is missing $21 trillion, according to government numbers, and a PhD economist that specializes in public budgets at the university, at the Michigan State University, Dr. Mark Skidmore. That's 42 trillion. I mean, it's, Rob Kirby says, we've been told the money supply is X, but it's not X. It's X times 3 or 4 or 5. We don't know what the heck it is. We have no idea what it is. Back to your thing you wrote down, and I wrote this down. Risk people do not understand. Risk people do not understand. That is a freaky, scary term. I mean, if you have a gun and you put it up to your head, the risk is you can blow your brains out.
Yeah. But we've had a system now, Greg, where it's always been, for as far as people can remember, people living today, it's always been right to be in the stock market. It's always been right to be in the property market. It's always been right to be since 1980 or so in the bond market. So it's been so easy, and central banks have saved them every time there's been a smaller setback, like in 87 or 99, 2007, 8. Every time, the central banks come in there and pumped in more money, and this is why we've gone from basically zero debt 100 years ago to 250 trillion plus all the other items, as I mentioned before, unfunded liabilities and derivatives. So it's been easy for people. As long as you haven't had a high leverage, everybody has made money by being in market. So why should it change? That's what everybody's thinking. Why should it change? Well, it will. And I think we're there now. I mean, you could say that, and I've said that for some time. It's taken longer than I expected. But, you can't wait with your insurance, like your fire insurance of the house. You can't wait until the fire starts. You've got to have it. So it's only a question. We don't tell people you must have 20, you must have 50% in gold. We tell them you should have as much as you feel is right, but we think that you should have enough to cover all your other assets if they decline dramatically, because they're also going to be totally liquid. Remember that. Now, the whole market, the property market, our stock market, etc., things are going to crash, and there'll be no liquidity. And that's one thing with gold. There's always liquidity, and if there isn't any money in the system, gold will, as I said, be used for barter. So you can always use your gold, and there are very few of the bubble assets that you can do anything with when pressure comes in the market, and they're coming soon.
Gold, Switzerland, you guys acquire, and I know people will say, well, he's just talking his book, just another gold guy. I actually believe that I don't know where there are assets. There's land, there's, like you said, there's mining, mineral rights, there's art, there's diamonds, there's physical stuff. But isn't gold and silver right here in the low 12s and the 15s for silver, $15 an ounce, $1,200 an ounce? Isn't that around mining cost?
Yes, well, miners have managed their businesses slightly better in the last few years, so they have lowered the costs. But a lot of some mines are making profit at this levels, but some are not. So it is around or slightly above our average cost. But there's so many. We reached peak gold. I mean, all the major finds that were made in the late 1900s, you're not finding any big deposits anymore. So we are gold. There's now about just over 3,000 tons mined every year. That's going to go down in the next 5-6 years to probably 2,000 tons. And of course, the big problem in the gold market is the massive amount of outstanding paper gold. And when that, whether that's COMEX or whether that's in the interbank system, the bullion banks, and those amounts are so big, and when people start worrying about gold and ask for delivery, they will not have any gold available. So that's a market that when that breaks, and it will break, and people ask for physical settlement, then gold can go up thousands of dollars overnight or over the weekend. And I think that will happen at some point. I'm not trying to be sensational. I'm just looking at the market. I'm just looking at when there is a massive amount of paper outstanding, and all of that gold, all the traded gold on COMEX now or in the interbank system is settled now with pounds or dollars or euros. No one asked for physical settlement because no one is worried, because they're all speculating in paper gold. But when people ask for physical delivery, there won't be any gold there. And that's when the price will just go straight up. As I said, and that's inevitable. I'm not trying to talk gold up. I'm just saying that's just a function of the way the market works today.
Andrew Maguire was talking about how if you count derivatives, you could have 1,000 ounces claim on every ounce. He says right now you probably have about a 500 claims on every single ounce.
Yeah.
He says probably with derivatives 1,000 ounce. Are you having trouble getting tonnage for your clients? I mean, big amounts of gold in the background. Are you having trouble acquiring?
No, not today. It's interesting because there are so many who believe still in the paper market, that the physical market, although all the gold that is produced every year, which as I said is a bit over 3,000 tons from the mines and another 1,000 or so from scrap gold. That is all absorbed. The majority, of course, is going to China, to India, and then just to take Russia. Russia has more than doubled or trebled their gold holdings in the last few years, and you take China. China has gone from nothing in 2006 to 16,000 tons today. So the people in the East, they know what's happening. They understand it. Why do you think Russia is selling US treasuries and buying more and more gold? Why do you think China is trying to reduce their massive treasury holding, which takes a bit longer, and also continues to buy gold in very big amounts every month? For the simple reason that they know what's happening. They know that the dollar will become worthless, and they know that the financial system is most probably going to break.
What do you think about this? What do you think about this fall?
I think this fall, if I look at markets now, I think and you measure the risk short term, because the long term, the risks we know it's inevitable that what I have outlined now is going to happen. But short term, you have to look at technical events, and it looks to me, I think there's, for example, the U.S. stock market. I've said for months, topped at the end of January this year. There's always a slight chance of a final hooray or final bubble. But I think we are going to see markets turning this autumn. I think it'll be dramatic. I think and that I also look at the precious metals. If you look, people are worried about gold has come down. Now, we've been into gold since 2002. If you look at the long-term trends, gold is up dramatically. Gold in dollars has corrected a bit more, but of course, gold is very often quoted only in dollars, because that's what people are lazy around the world. But in Switzerland we buy gold in Swiss francs. In the UK we buy in pounds, and so you've got to look at your local currency. And if you look at Canada or Australia, gold is near the top in Canadian dollars and Australian dollars. It's not far from the top in, for example, pounds. So it's just that the dollar has been a little bit stronger temporarily and artificially. So the dollar, once the dollar turns, gold will go up even in US dollars. So I think all of that is going to happen now. I think the precious metals market is going to turn. It might even be bottoming right here now. It looks like that technically, and so will the other markets. And then at some point all hell will break loose. There's no question about it. Might have a slow start, but you could also have a dramatic start, because these catalysts come out of the blue when nobody expects them. So it could be something very serious coming this autumn, and as you said, politically that will be the case also. I mean, the U.S. has never had a president who is criticized to the extent that Trump is, and I mean he's hard-headed and he's fighting, but the whole political system is fighting against him, and that's not going to be tough politically in the U.S. also, very tough.
Yeah, well, unfortunately, it's the new world order, and the people that want one world government that are freaking out is the real deal. He's not doing anything other than, looking up for we the people, and he's being
Yeah.
punished for that. I mean, the whole Russian thing's a hoax. You had a phony
Yeah.
investigation started, and he's calling it the way he sees it, and I applaud him for it. So and
Yeah.
he
No,
and
I agree with that.
I mean
I
the
agree.
EU has been
Yeah.
the EU has been a disaster for Europe. Come on,
So
it's
absolutely, totally. I mean,
it's been a disaster for the for the
absolutely, and
for we the people of Europe. It's been a disaster.
yeah. I've spent, because I have lived on and off in the UK and still have a house there, and I'm absolutely 100% for Brexit, for the simple reason that I don't believe that an unelected and unaccountable elite should govern over 500 million people. They haven't got a clue what's happening in Greece. Or in northern Scotland or in northern Finland for that matter. They haven't got a clue, and they have no right to do it. But they are, and they are forcing now the UK to stay in Brexit. It's not. It might work short term, but you take Italy, you take Greece. It's going to, and you take, of course, Poland and Hungary and Czech Republic. I mean, they're all against what's happening now, major parts of what's happening in the EU, and it's a disaster. It's not. I've said for many years, the euro is going to collapse, and the EU is going to collapse. It should go back to what it was, just a trade union, rather than a political union. That the elite is trying to make it. Yes, it will collapse, and it's very, very sad because Europe used to be a good country, but I think Europe is now in the decline, and it's going to be serious because the banking system, we haven't talked about that. The banking system in Europe is an absolute disaster, and the enormous debts that Italy and Greece and Spain are accumulating, financed by the ECB and by Germany indirectly, and by German banks and Deutsche Bank, which is also bankrupt. Sadly, that will all collapse. And that's coming too. So as we said, it's global, Greg. It's global, and that's why I don't see any way out. I wish there was, because I enjoy life. I'm a positive person. Might not sound like it today, but I am. I believe in put your house in order, do what you can, protect yourself, and then enjoy life. Because we're here for a short time, and why not enjoy it while we are?
Well, that's another reason for 20% at least gold with the goings on in Europe in the banking system. I'm surprised they propped Deutsche Bank up as long as they have. I mean, I think once they pull the pin on Deutsche Bank, the whole thing flushes down the tube, don't you?
Yeah, no, I think so too. But I believe that they are going to, the German government and the Bundesbank, central bank in Germany, are going to do all they can to keep Deutsche Bank going, because short term, because it's part of the establishment, so they will print money, they'll do everything they can do to keep it going for a while. But in the end, they can't. With 50 trillion derivatives, there's absolutely no chance to keep it going. And the market doesn't believe in Deutsche Bank either, because it's valued at a third of its asset value, for example. So it will, absolutely. That's one of the ones, and that will be a disaster. And when that starts, the whole thing will just fall like dominoes.
And if you look at what you're talking about, whether it's the EU or whether it's the political climate, the indictments, the banking system, Deutsche Bank, U.S. banks are weak too. They say they're not, but they are. This fall, you're looking like, wow, can they hold it together past October? I don't know. Is that why you come up with that kind of scenario?
Yes, it is, and it's also because when I look at markets, I look, the markets are giving me the signal that things are going to turn now in the autumn, and you can easily find a number of catalysts for this to happen. So I think it's it's going to be an interesting autumn, but it's going to be a lot of things happening that will change the world.
All right, I had a little sync problem at the end. We started out totally in sync, but I couldn't stop this. You were so interesting. It wasn't sync very back, so hopefully everybody will just dismiss the slight sync problem. But and take in the wonderful commentary that you have. You're a guy. You're a paper guy. You're a guy that spent a couple of decades in the banking system. You're not a gold guy. You were a paper guy, a bond guy, a stock guy, right?
Yeah, I was for a time, but I also been in commercial life, and that's where I learned more than in the banking system, because in the banking system nobody understands risk, nobody. But in the commercial world, which is a lot tougher, there I learned more about risk than anywhere else, and that's, I think, and this is why I'm now actually, I do understand risk better than anything else, and I'm taking a very long-term view on risk, because there's no use. We can't affect the short term anyway, and it's going to happen. It's inevitable. So we're going to have a very interesting time and a lot of interesting discussions, Greg. It will be sad for the world, but it's inevitable.
Egon von Greyerz, Matterhorn Asset Management is also Gold Switzerland, which I'll put all the links up for both those things. Thank you so much for joining us today. I love the nobody understands the risk. Nobody understands what the trillions and quadrillions. Nobody understands the risk, but boy, you better have your stuff wired tight when this thing hits. You better have it ready to go when this thing hits.
Yeah, and people would discover it late, and a lot of people will rush in to cover that risk. But sadly, the market is too big in order to achieve any protection. When everybody rushes into it, it'll be too late.
Thank you for revealing what your clients are thinking, which are not just people that inherited money. These are people that are smart, connected, wealthy.
Absolutely.
They're smart and connected. I mean, they
entrepreneurs. There's all kinds.
They're very smart and connected people, and this is what they're doing. So just I always like to say to my friends, I like to do what the rich people do. And I remember when a rich guy told me, I was talking about paying my taxes, escrowing my taxes. He goes, "Oh, yeah, rich people don't do that. We don't have people save our money. No, we just pay it at the end of the year." And I was like,
can I just say one thing? When you say, in this case, rich people, the people we are dealing with, which is interesting, they see the problems, they see the risk. So they're actually humble people. They're not big-headed. They don't think that they're masters of the universe. They actually see the problems. So you're talking about, the wealthy people who actually are genuinely concerned about what's happening, rather than people who believe this will go on forever. So that makes them very interesting to deal with. Anyway, we're having a good, interesting time.
Oh, listen, I don't put down, I don't put down rich people. If you're wealthy, more power to you. Good for you. I'm not one of these, oh, I need some of that. I don't, I just find it very instructional to see what very wealthy, connected people are doing, and what they're doing is what you're telling me they're doing, and the masses aren't doing it. And I'm just saying, listen, do what the rich people do. If you can't do that, you need to buy stuff. You buy water, buy food. Put new tires on your car if you don't have money to vault gold. I mean, there's just buy stuff. Get yourself out of debt. These people don't have debt, obviously. They're buying gold. Gold is not debt. Gold is the anti-debt. So they're the opposite of that. So do what they're doing. That's what I'm.
Can I just add, Greg, because it's not, gold is not just for the rich. It's for everybody. Everybody can buy, let's say, a gram of gold a month.
Or an ounce of silver.
A gram of gold is $40. Most people in the West can afford that. That would have saved people, and maybe, if people in Venezuela would have done that 30 years ago, 25 years ago, it would have saved them. The same in Argentina, the same in lots of these countries. So it's not just for the rich. Everybody can buy a small piece of gold on a regular basis. So don't believe it's just that the rich that can protect themselves. It's for everybody.
Or they could buy silver. You could always just buy silver coins.
Oh yeah, silver, fantastic, absolutely. So it's fantastic. Yeah.
So anyway, listen, Egon von Greyerz, thanks for coming on. I know we had a little sync problem, but you just said very interesting. I don't really care about the sync problem. I just think what you had to say was very interesting, and thank you for revealing, what your clients think and what you think, and putting your brain on parade here. Egon von Greyerz, thank you for joining us today on USAWatchdog.com.
Greg, thanks so much. I really appreciate what you're doing for investors. Thank you so much.